Welcome back. We are in the seventh question. Seventh question of the 2017 O level. Again and again, we are meeting with different questions. We are taking questions one by one. Yeah, so it's easy and simple for you. And the length of one session has been shortened. It's not too long, so it's more attractive for you and better in terms of the workability. You know what is meant by workability? Yeah, workability, that means the ability to work out things. It's easy when the session is shorter, better than watching a few questions in one session. So one by one question per session. These type of accounting questions we are taking one by one. Seventh question, starting with, what is the objective of preparing the trade account? What is the objective of preparing the trade account? Well, you may know, I really surely know, trade account is the account which is prepared for debtors, the trade debtors, yeah, the customers, and creditors, the suppliers from whom we buy the goods. Yeah, isn't it? Trade debtors and creditors. The trade account? No. Trade account? Tell me. By now you should know these things. There is no question about it. Just don't act the fool. Give me the answer. What is the trade account? Yeah, that's right. Trade account is the upper part of the profit or loss statement. The upper part of the profit or loss statement. Upper part where the gross profit is calculated. Yeah, I'm just reminding you where we get the trade account. Where do we get the trade account? We get the trade account in the profit or loss statement. All right. Now, by now, you surely know about these things. So, what is the objective of preparing the trade account? To calculate the gross profit or loss. Can be a profit, can be a loss. Yeah, gross profit of a specific period, okay, got it? Calculate gross profit or loss of a specific period, accounting period. B part. Write the double entry relevant to record accrual expenses. Write the double entry relevant to record accrual expenses. Accrued expenses, we know the accrued expenses means the unpaid expenses, the outstanding expenses which we have not paid Yet, even at the end of an accounting period, expenses which are outstanding, unpaid, but have to pay. So if expenses are outstanding, unpaid, which means they are liabilities. Very simply saying, liability accounts are always credited. Liabilities, when we get more and more liabilities, liability accounts get credited. Then accrued expenses are liabilities. So accrued expense account should be credited. Accrued expense account should be credited. They're asking us to write the double entry now. The debit account and the credit account. Yeah. We already have the credit account. Now tell me the debit. Tell me the debit. Debit account is what? Is the relevant expense account. The relevant expense account should be debited. Got it or not? Got it? No? No? The double entry they are asking for accrued expenses. Okay? Accrued expenses means unpaid expenses. During an accounting period, even at the end of the period, let's say a relevant specific expense is not paid. Let's say, example, rent 1,000 per month. Then for the 12 months, January, February, March, April, May, June, July, August, September, November, December. For the 12 months, if 1 month 1,000, for the 12 months 12,000. But as at December 31st, only 10,000 is paid. How much is accrued? Unpaid? 2,000. So accrued expense account should be credited with 2,000. The rent expense account, the relevant expense account, must be debited with 2,000. Double entry. Next part. Whoa, it is a non-profit organization. Why can't you say? Just by looking at the name, receipts and payments accounts come in non-profit organizations. Not for profit. Number of members in Minimuthu Sports Association. I was expecting a sports association, yeah. Minimuthu. Number of members 100. Number of members 100. Annual membership fee also 100. Okay. So 100 members. One member is paying 100 per year, which means 100 multiplied by 100. Annual membership fee is, okay, let me underline that also. Then it is annual membership fee per member is 102. Okay. The receipts and payments account is given for the whole year. Well, it must be a really small association, right? 100 rupees for the whole year annual membership fee, and 100 members are there, right? Small game type, rural villages have these type of sports clubs. Yeah. Receipt and payments account is given. Balance at 1st January, 12,000 cash balance they already have. The balance of the receipts and payments account indicates the cash balance because it's a cash book, no? Yeah. Membership fee received 7,000. Purchase of sports equipments 8,000. Expenses for pavilion 3,000. Sports advisor fee 5,000. And the final balance, the closing balance of cash. Closing cash balance at hand, 3,000 remaining in the business. Required. What do we have to do? Income and expenditure. Yeah, income statement of Mini Muthu Sports Association for the year. Income statement of Mini Muthu Sports Association. Income statement. Children, it's a profit or loss statement of non-profit organizations. Let's do it. Shall we do it here, right here? It's a small one. Yeah, better we do it here. Erase. Take more space. Let's draw. Let's draw. Okay, we are drawing the income statement right here. Income statement for the year ended. Income statement for the year ended. It's right here. For the year ended 31st December 2016. For the year ended 31st December 16. Incomes on top. Simple format now, children. Just let it slide like that. Incomes, then expenses. Under that, expenses. If you can just draw some lines and make it neat. Right, let's take the incomes now, shall we? Yeah, let's take the incomes. Receipts and payments account. It is the cash book. All cash receivings in the debit side, all cash payments in the credit side. All cash receivings in the debit side, all cash payments in the credit side. But we don't take all cash receivings, we don't take all cash payments. We don't. No. We don't take. We take only the relevant incomes for the accounting period and relevant expenses, operating expenses for the accounting period. Let's take the balance. Don't take the balance. We don't take the balance. Where did you hear that the income statement is started with a balance? Where did you hear that? No. You don't take any balances to the income statement. Do we take a balance to the profit or loss statement? BBF, cash balance? No. So, not necessary. Let's take, this is not necessary, cash balance. We'll take the membership fee, 7,000. Income, right? Membership fee or subscriptions, 7,000, right? Done. I recorded that. Only that we have in the debit side, so I took that. Let's take from the credit side. Why? Let's take the items in the credit side. We have why? What? This one. It's the membership fee, 7,000. Why? What is the problem? Okay, right, yeah. It's not 7,000? Then how much should it be? If it is not 7,000, how much should it be? Huh? Tell me, you tell me. That's right. Yes, that's right. You should know these things by now. You don't take the given received membership fee in the receipts and payments account. You should take membership fee as an income, but you don't take the received. You don't take the received amount. You should calculate the relevant amount, the full amount for the period. Okay, not the 7,000. You should calculate the relevant amount, the full amount for the period. How much is the full amount? 100 members into 100 rupees. Annual membership fee is 100 rupees. 100 into 100. How much? I'll do the calculation here. 100 into 100. How much? 10,000. That amount you must take, not the given amount. Okay, not the given amount in the receipts and payments account. So you should take 10,000. 10,000. Done. Now to the credit side. Purchase of office equipment, purchase of office sports. I'm sorry, it's a sports club. Sports equipments, purchases. Expenses, right? Should be recorded, right? No, should not be recorded. It is a purchase of an asset, so we don't record. Purchase of an asset. Non-current assets we don't record as expenses in the income statement. Okay, we don't record. Expenses for pavilion, that we record. Pavilion expenses, 3,000. Sports advisor fee, 5,000. Well, that is a day-to-day expense, no, not a non-current asset. I mean, the advisor's fee, that is a day-to-day expense. In a sports club, you should pay for coaches and advisors. Yeah, advisor. Sports advisor, 5,000. Okay, that's it. Yeah, that's it. This is the cash balance. No, you don't record this one. That is the cash balance, the closing balance. You don't record that one. So this one already taken, this one already taken. That's it. It's such a simple one, such a simple income statement. 10,000 is the total income. Out of that, expenses 8,000. 10,000 minus 8,000, 2,000. This is the surplus of the period. Surplus of the period, 2,000. Done. Finished. Moving on. Third part. Oh my God. Here we go. Here we go again. Financial statements. Like it? Love it. Yeah, I love it too. It's fun. It's a good thing, right? Let's get started. Trial balance of Ranga's trading business. I'm serious. It's fun, right? Preparing financial statements. Ranga's business children as at 31st December 2016, it is given the trial balance. Okay, right, we have all these items. Notice these items. Notice. A provision for depreciation is given with the distribution vehicle cost. A provision for distribution, provision of depreciation, provision for depreciation, it is given here with the cost. Notice these things. Bank loan has a 12% interest rate. 12%. Notice. Other things are the same. No insurance charges, expenses, sales, purchases, debtors and creditors. Discounts received, discounts allowed, bank loan interest, bad debts, electricity charges, rates, and administrative expenses, and so on and so forth. The usual expenses and incomes. Now, what are we required to do? It's on the other page. Here we go. We are required to take this additional information to, adjustments and prepare take the adjustments to, and prepare the statement of profit or loss statement. And as always, a statement of financial position, and done. 12 marks. That is for the entire question. For these two, 4 marks and 4 marks. 8. You're gonna get 8 marks for preparing the profit or loss and SOFP. Get to it. Let's get to work. Beautiful. All right. I'm gonna draw both statements right here on this slide, on this page, both statements. Okay. From this corner, profit or loss statement and SOFP. Okay. Here we go. On the same page. So it's easy for you, right? This side profit or loss, this side statement of financial position. People call it, actually I call it SOFP. SOPL, SOFP. Statement of financial position. Put the date as at. As at. Okay. Put the name of the business here on top. Ranga Trading. That is the name of the business. There we go. Put the date here. And let's name this SOPL. Ranga Trading. Statement of profit or loss. Statement of profit or loss. For the year ended. Okay, and the date. I don't have so much space, children. I'm managing it. Okay, all right. Now, don't forget to mention, fill in the main items, the headings, right? We don't want to start the question without drawing or without ruling both the statements fully. Don't even think about it. Or don't think that you can first prepare the income statement. I mean the SOPL, statement of profit or loss. Don't think that you can prepare the SOPL first and finish it, then go and prepare the SOP. No, should prepare both at once. You should do it together. Be careful, right? You can't do these accounting the statements the way you want. There are procedures, there are rules, principles. You will not get marks if you don't do these, if you don't follow the steps. I mean, if you don't do the things properly. Simple as that. Hope you got it. So let's fill in the main headings first. Sales should be on top, and from that you should minus what? Less or minus cost of sales. Write your headings. I'm just gonna use short forms. Okay, cost of sales. Under cost of sales, what are the main items, children? Under cost of sales, what are the main items? Tell me. Yeah, opening stock. Then opening stock. Then you should add purchases. Then if you have carriage inwards, loading expenses, unloading expenses, keep some space here, and minus last item is closing stock. Got it? Then you have to add other expenses. Oh really? Other expenses. Incomes. Add other incomes. And minus or subtract expenses. expenses. I'm using my space, the available space, and writing these items as short as possible, but I know that you already know these formats and the order of things. I know that you know. If you don't know, I can't help it. You have to study. You have to study. This lesson was done actually in DP Education. There is a video where financial statements lesson is carried out. So you better watch that video, financial statements of a business. There in those videos, preparing financial statements and the formats, the ruling of preparing of formats, everything is explained very well. Good. Now we are moving on to the statement of financial position. On top we have non-current assets. Non-current assets, all right. Short forms. Non-current assets. Current assets. Current assets. Under that we have capital and liabilities. Capital and liabilities. Main capital item is under capital and liabilities, the main items are capital as at first 2016, that is the opening capital, children, the opening capital, plus net profit. Net profit minus drawings. If drawings are there, you should minus. Finally, last but not least, we have the non-current liabilities and current liabilities. Got it? Done. Format's done. Moving on. Let's take the adjustments first. First of all, you should do the adjustments. All right, don't play around with this question, or else it's going to take so much time and it'll refuse to balance the SOFP. If it doesn't balance, that is like that is the worst thing that can happen in an exam. Yeah, there can be other things but if you spend so much time to prepare the financial statements and finally the statement of financial position, if it doesn't balance it, that is so bad. Okay, so don't play with this question. Do it in order, in the way that we do here. Okay, let's get to work. First, additional information. Stock as at 31st December 2016, 28,000. You know that every adjustment must be recorded in the income statement and in the SOFP, both. Okay, so this stock is the closing stock. This stock is the closing stock. This is the closing stock. Closing stock. You know that closing stock goes to the trading account, the upper part. 28,000 in the profit or loss statement. Closing stock. Okay. Upper part of the profit or loss statement. P&L. Here, closing stock. Let's put it to the second column. 28,000. Within brackets. Okay. Now it is in the profit or loss statement. It should go to the SOFP. Where? Non-current liabilities. Non-current assets. No, current assets. Current assets. Closing stock. Got it? Okay, done. Yeah, first adjustment is done. Distribution vehicles should be depreciated annually at 10% on straight line method. We know that depreciating is done according to the method called straight line method. According to a method called straight line. That is what they have given. Yeah. But the important thing is the percentage. How much should it be depreciated? Now they say 10% should be depreciated. Take the cost of the motor vehicle first. What is the cost? What is the cost? Cost is in the trial balance. There you go. I have already marked. Cost 2,50,000. 250,000. And I marked and I told you to notice the provision for depreciation. That is as at 1st January 2016, as at the beginning of the accounting year. Okay, you have learned that provision for depreciation means that is the depreciation value which the motor vehicle, distribution vehicle already has, or in another way, the depreciation of the previous years. So it is not mentioned in the where, it is not mentioned where, in the profit or loss statement. Yeah, but just keep in mind that 30,000 is there. Cost means the purchase price and the original value, original cost of the distribution vehicle, 250,000. It should be depreciated 10%. 10%. And the answer is annual depreciation. Annual depreciation, children. Annual depreciation is how much now? How much is it now? 10%, 10 over 100 out of into 250,000. Answer is 25,000. Answer is 25,000. That is the annual depreciation. It should go to the profit or loss. Under which heading? Under expenses. Okay, under expenses. Under expenses. Okay, which category? Tell me that. Which category? Distribution expenses category. So distribution expenses you should mention here under expenses. depreciation of distribution vehicle. Vehicle 25,000. Done. You recorded in the SOPL, statement of profit or loss, this depreciation of distribution vehicle. Now it should go to the SOFP. But remember children, although the annual depreciation is 25,000, that doesn't mean that is the total depreciation. This is the annual depreciation only. Annual means per year, for this year. But for the previous years, there was a provision given. So this year's depreciation should be added to the provision, and the total must be taken to the SOFP. 30 plus 25, 55. 30 plus 25, 55 should be here in the statement of profit or loss. Okay. Under non-current assets, first let's write under non-current assets. First of all, distribution vehicle, cost is this column. Second column is accumulated depreciation column. Third column is haven't drawn the third column, so let's draw the third column. Yeah, think it's okay now, huh? Can you see that? Third column is the carrying value column. Some people, we can call it carrying value, some people call it net value or book value. All terms are correct. That means, you know that what that means, right? That means when the depreciation, the value of the asset which has gone down, the depreciated value, when the depreciated value is subtracted from cost, the current remaining value is the carrying value. Got it? Yeah, that's it. That's what I have to say about the carrying value. Some people call it the book value. That is also correct. Now, cost is how much? 250,000. Cost is 200. Accumulated dip is how much? Accumulated dip, is it 25,000? No, it's 55,000. 55 within brackets. If you want, you can put the carrying value right now. Which one? This one? No, I said you can put the carrying value. Oh, okay, wait. You are asking what is this? How did this come? 55. With the annual dip 25, we have to add the provision for depreciation, which is given here, 30. Yeah, to get the carrying value, you should mention the total depreciation with the provision, and getting the provision, and provision for depreciation means the previous year's depreciation up to this year, and this year depreciation 25, total should be taken. That is 55. Got it? Got it. So done with the second adjustment. Third one, Prepaid insurance as at 31st December 2016, 2000. Prepaid. Got it. Got it right? Didn't get it. Prepaid. Overpaid. Paid in advance. Paid more than what is needed. Yeah, that is an asset. That is actually a current asset. Prepaid what? Prepaid what? Prepaid insurance. Okay. Prepaid insurance 2000. Put to current assets. Let's include it in current assets. Prepaid insurance 2000. Now we have to put it to this. How do you put it to this? I mean, statement of profit or loss. 2000 is prepaid of, out of insurance. Insurance is given right here, 12,000. Out of 12,000, 2,000 is prepaid, overpaid, not relevant to this year. That means not relevant to this year. Which means, that's right, from 12,000 you should minus 2,000 and put it under expenses. What expenses, children? What expenses? Admin expenses. Administration expenses. First of all, let's draw a line, otherwise my handwriting is gonna go from here to there. Now we can write administration expenses. Short form, I'll write admin expenses, okay? Insurance. It's better if you can mention 12,000 minus subtract 2,000. Within brackets, if you mention in front of the item, it's very convenient. It's very good. So 10,000 comes as the answer here. Insurance expenses. Alrighto, we are done with all the adjustments. Alrighto, that's great. Done. Let's go to the trial balance and tick the items one by one and take them to our statements. Capital, we have 200,000 of capital. Let's take it to where it belongs. 200,000. It belongs here. 200,000. Next, distribution vehicles we took the cost of the distribution vehicle, subtracted the provision for depreciation. Yeah, the SOFP. Yeah, distribution vehicle cost and depreciation both. Done. So both can be ticked off. Okay. Stock. 1st January, opening stock 35,000. Take the opening stock here, 35,000. Done. Tick it off. Tick it. Ticked. Opening stock. Yeah. Wherever you put the item, you have to tick it here. Then 12% bank loan. Okay. Bank loan is a non-current liability. 50,000. And don't forget, I have brought this. I have already noticed this. See, I have underlined. It's 12%. Okay, that means you have to calculate the interest. Let's take the interest. 50,000 multiplied by 12 over 100. How much? This one, I'm talking about this one. 12% bank loan. Out of 50,000, you should calculate 12 over 100. And the answer is 6,000. But now you have to notice that the interest, this is bank loan interest. This is bank loan interest. Now you have to notice, children, there is a bank loan interest already. There is a bank loan interest already given here. Where? Where? Oh, here. It's 4,000. This is a hidden adjustment. We have discussed about this earlier. Yeah. Oh, yeah. We have. The bank loan says it has an interest rate of 12%. It says here. And when we calculate 12%, we get the bank loan interest 6,000. But the given bank loan interest for the period is 4,000. What is the matter here? The entire 6,000 is not paid, only 4,000 is paid, which means 2,000 is accrued. That's how you do it. So let's take the accrued interest to the SOFP. Accrued means unpaid. Unpaid are liabilities. Accrued bank loan interest 2,000. Yeah. Now put it. Oh, we forgot to mention the bank loan. Bank loan. You have to mention the bank loan. 50,000 under non-current liabilities. Now you mention the bank loan interest here in the SOPL, because although accrued bank loan interest is a liability, bank loan interest is a expense. What kind of expense is it? Bank loan interest? Yeah, financial expense. Under financial expenses, bank loan interest. How much? 6,000. We calculated the bank loan interest. The total amount for the period is 6,000. Hope you can see this, children. Done. That's done. And that's done. interest. So it's ticked off. Insurance charges we already took. Yeah, we took. We took. Insurance charges we took. Yeah. Sales. Let's put sales 220 into the SOPL. Where is it? Come on, where is the sales? What? Oh, yeah. Oh, it's there. You know, when the screen gets all stuffed up, it's hard to find. I know where it is. You should know where it is. Sales 220,000. Done. Yeah, done. Okay. Purchases 170,000. Purchases 170. Done. Ticket ticked. Debtors we have 30. You know, debtors and creditors are assets and liabilities, yeah. So goes to the SOFP. Debtors 30, creditors 40. Yeah, 30 and 40. Debtors 30, creditors 40. Okay. That's great. Debtors should be here. 30. Creditors should be here. 40. Beautiful, beautiful, beautiful. Right. Let's finish it up. Let's finish it off. Done, done. Discount received is an income. It is an income. Discounts allowed is an expense. Discount received 4,000, allowed to 2,500. Discount received 4,000. It's an income. Discount received. Let's put it here to the second column. Discount received 4,000. And discounts allowed 2,500. Yeah. Almost done. We took the bank loan already. Discounts allowed we put, and bank loan we have taken already. Bank loan interest we have taken. Bad debts and electricity charges. Bad debts 1,000, electricity charges 1,500. Bad debts 1,000. Electricity is 1,500. Bad debts go under both our expenses. Bad debts go under distribution, right? Bad debts. $1,000. Electricity go under admin. I'll use another color so you can see it clearly. Electricity. $1,500. There you go. Now let's see the final outcome. Yeah, It's not bad, is it? Nah. No. Looks okay. Oh, but we are not finished. We have rates. We have rates. Oh no, we have rates and we have admin expenses. 2000, 6000. Now it gets bad. I don't have space. Where? Both are administrative expenses, right? Rates and administrative expenses. See, 2000, 6000. Where am I gonna put? Gosh, where am I gonna put? I'll have to erase the financial expenses part and take it down a little bit. Let's put rates and admin expenses. Rates 2000, admin expenses 6000. Wasn't it? Yes, I can remember. Yeah. Yo, let's go and check. Rates 2000, admin expenses 6000, and cash balance, finally it's 30,000. Cash balance goes to SOFP. Cash 30,000. We are done, but we have to, oh wait, we have to enter the financial expenses because we erased it. Financial expenses. We had only one item under financial expenses, one item only. Tell me what? Interest, bank loan interest, yeah. Interest. And interest was 6000. Can't you remember? We did a calculation. See, bank loan interest 6000. We didn't take 4000 because we should take the annual, the relevant amount for the year, for the period. The relevant full amount, the total amount relevant for the year, for the period. That is not 4000, that is 6000. Yep, let's go. Finish it off. We took the cash balance and done. Now it's up to you to do the calculations, all right? First, we are going to calculate the gross profit, then net profit. Okay, right. Here we go. All the calculations I'm going to do in red color. First of all, let's take, there is a calculation under cost of sales. Opening stock plus purchases. How much? 170 plus 35. 205. Yeah? Yeah, 205. And where is our closing stock? It's here. 28,000. It should be here. Closing stock should be here. 28,000. Okay. I just erased which was in this column and I put to this column. Now 205,000 minus 28,000. Okay. Do the calculation and put the answer here. Children, what we did was opening stock 35 plus purchases 170, and we got 205. That is actually 205 is the goods to be sold. Cost of, you have to write cost of goods to be sold. To be sold. Cost of goods to be sold. To be sold. Okay. Cost of goods to be sold. 205. From that, the closing stock, the remaining stock which was not sold, is 28,000 should be minused. Then we get, should be minused. Then we get 205 minus 28,000, 177,000. That is the cost of sales. Cost of sales. Okay. That should be subtracted from the sales. Sales minus cost of sales equals to gross profit. So 220 minus 77, 43,000. That is gross profit. Don't have space. Oh my God, no space. I'll just write here gross profit. Gross profit. Okay. Gross profit. Very tight situation with very less space. But we are managing. We are going well. Right? No worries. Let's move on. Gross profit 43,000. Okay. To that we must add incomes. We have one income, and that is this income received. Add it. Add. One income. 43 plus 4,000. 43,000 plus 4. 47,000. Okay. Right. Now children, take the total of all the expenses, and we must minus all the expenses. Yeah. It would have been nicer, it would have been great if we had another column here like this. If we had another column like this, it would have been great. In your examination, children, although I don't have space here, you will have ample space. You will have enough space. So take one page, one paper, answer sheets, one answer sheet for profit or loss statement, and another one answer sheet for statement of financial position. Don't try to save. That's not a good advice to give. Don't try to save. The advice always is save. Save the environment. Save money. Save the children. Save that, save this. But I'm saying don't save. Don't save in this case, children. Don't save your pages. Don't save your papers in this case. In this case, take one answer sheet, one whole page to this, and another whole page for this. Okay. Then you will have enough space to draw 3 columns. 1, 2, 3. Okay. If you drew 3 columns, you could have taken this column here and this column here, and one entire empty column would be remaining for me to get the expenses, for me to mention the expenses. Now I have to mention the expenses in the second column. in this column, and take the total of expenses to this column, right? Let's take the total distribution expenses total. 2000, 25,000, 25,000, 25,000 plus 2,500, 27,500, 28,500. Now take the total of administration expenses. Whoops, it's down there, it's down there. Take it up. Shake it up, shake, 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 and take it up. And we have administration expenses. We have 10,000 plus 1,500 plus 2,000 plus 6,000. 6 plus 2, 8,000. 10 plus 8, 18,000. 19,500 here. 19,500. Total of admin expenses. Now financial expenses only 6,000. Now we have to add and take the total expenses. Total expenses. That means distribution expenses we have 28,500. Admin expenses we have 19,500. And financial expenses we have 6. Take the total. 28,500 plus 19,500. How much? 28,500, 19,500. How much? It's 48,000. It's 48,000 here. Addition of these two. 48,000 plus 6,000, 54,000. Total expenses 54,000. 54,000. Got it? Finally, it's up to us to calculate the net profit. Net profit is calculated by gross profit here. We have gross profit here. Gross profit plus other incomes. We have other incomes here. Other incomes here. And total incomes we have 47,000. That means gross profit plus other incomes. 47,000. Oh my god. Oh my god. From this, when you minus this, it's a loss. It's a loss. Let's do the calculation and let's mention the loss. Net loss for the period, how much? 47,000 minus 54,000. That means it's a loss. 7,000. 7,000 is a loss. Yeah, net loss. Let's take the net loss to the SOFP. 7,000 should be mentioned here. It is not a profit, it is a loss. 7,000 minus. Now let's take down the SOFP and calculate the values. Calculate the values. Yep. We have distribution vehicles. 250 is the cost minus 55. That is 195. Yeah. Then current assets we have 28,000. Prepaid insurance 2,000. Debtors 30,000. Cash 30,000. Take the addition. 30 plus 30, it's 60. 60 plus 28, 88. 88 plus 2, 90. that is 90,000. Take the total assets. Take the total assets. Actually, it should be on top of capital and liabilities section. Total assets, that figure, it should be above this, okay? But because of the space problem, everything is crammed up together. There's no other problem, only the space problem is there. Okay, I'll take it here. 195 plus 90, 285. 285,000. Okay. Now, let's take the total of capital and liabilities. 200,000 is the capital minus 7,000. No drawings. How much? 200,000 minus 7,000, 193,000. From 193,000, you should get the total of liabilities and add it to that. Total of liabilities, 50,000 plus here 40,000. Is it 40,000? Yeah, creditors 40,000. Here 40,000 creditors plus 2,000, 42,000. 50,000 plus 42,000, 92,000. When you add 193 plus 92, you should get 285. Let's do it. 193 plus 92. When you add the capital value and the liabilities value, capital plus liabilities, you should get the same as that. Total assets. 193 plus 92, you get 285. Ladies and gentlemen, the SOFP has balanced. So to get like an overall view, I will minimize these statements so you can see. Can you see the entire view of the statements, the entire site? We balanced assets equals, total assets equals capital plus liabilities. Total assets equals to capital plus liabilities. This figure should be tallying with this figure. This is the total assets. Assets, capital plus liabilities. That's that. So children, with that, we are going to end today's session. Our session, this is the 7th question of 2017 second paper. That is the last question, financial statement question. And we balanced our statements. Done deal. The work is not very neat and tidy, but yeah. So I hope to see you with the next paper, that is 2018 first paper, MCQ paper, then the second paper in a very short time. Until then, do your papers, do your work, and get prepared, get ready for the examination. It's at arm's length now. Good luck. See you soon.